What's up, guys? Welcome back to episode 4 of the Crypt on the No Money But Dreams podcast. Yours truly, Alexander. What up, Bashir? How you doing? What's the time over there in Melbourne, mate?
We are at midnight at the moment, midnight Australia time. So it's all good here. We're living the life, and yeah, midnight Saturday and ready to trade with you, my friend.
Fantastic, fantastic. Let's jump straight into it. The first thing that I want to talk about is the inflation print that came out of the US last week. Give us a little rundown on that. If you want to share your screen, go through any fundamentals, please feel free.
Yes.
Otherwise,
Yes,
what are the implications?
Okay, cool. Well, I'm definitely probably the worst macro analyst or macro trader you're going to come across. So take everything what I'm saying with a grain of salt. But hey, you know what? Let's give it a red hot crack. So 9.1% inflation print came out of the US. So and markets promptly sold off on the back of it, fearing that there's going to be a 100 basis point rate hike coming out of the Federal Reserve. Really hot inflation print. Their mandate right now is fight inflation. So they were thinking that they're going to, continue to take a sledgehammer towards capital markets and risk assets in the hopes that they can further crush demand. And obviously, I think it was Fed Chair Waller came out and said, "Hey guys, cool off. We're only looking at 75 bips or anything, or I would vote for 75 bips." So, those kind of conversations kind of cooled the concerns a little bit. And then the markets and risk assets promptly proceeded to rally. And I think that the big story from last week, if we're talking about big macro stuff, was euro dollar. If you guys remember in episode 2 or episode 3, we were talking about the euro dollar breakdown being a signal for major macroeconomic headwinds, and that there would be a really big concern if it was to lose that 103 handle. And that level pretty much played out, that downtrend, right? It didn't even get like that nice bounce that I was thinking it would get at 103. No bounce. We went through it, and then we just teleported to $1 and hit parity there. So very concerning that is what had happened. And for anybody who wants to look into this a little bit more, I'd encourage you to check out Brad Johnson, I believe his name is, with the dollar milkshake theory. He explains like the reasoning behind USD strength a lot better than I can ever dream of doing so. So I'd encourage you guys to check that out, dollar milkshake theory. The man called it back in October, November last year. So that kind of explains the USD strength and the weakness in risk assets, which a lot of people were actually anticipating the other way around. They were expecting USD weakness, the denominator to essentially become worthless, and then risk assets and things paired against them would go quite well. So, those kind of things tended to eventuate in an inverse manner. But we've had somebody call the dollar milkshake theory, which is saying that the US dollar is pulling liquidity from elsewhere. And this is actually a bad thing because a lot of foreign nations have US dollar denominated debts, not necessarily to the US, but to other entities outside. So a German bank would lend to a Spanish bank in dollars with USD denominated debt. And, if they're unable to service that, then there's massive implications there. But that doesn't mean that the US is necessarily in a bad spot. So that's one thing. If I was to go back on, are you still seeing my screens, Alex? I just want to make sure you can still see that coming through.
Got it back, yeah.
Yes, sir. Yes, sir. And then the next thing I want to make sure that we touch on from a little macro perspective was oil. I think that you had a pretty interesting insight on that, Alex, regarding actual demand for oil. But we know that the Crown Prince Mohammed bin Salman is meeting with President Joe Biden. I think it's actually occurring over this weekend. I've been hearing some rumors over Twitter that MBS is looking to increase oil production to 13 million barrels. If that does occur, we can get a retest. I mean, if we're going back at oil, we're looking at 92 again. Key level that I mentioned in our previous market update. I'd be watching that one quite closely. You mentioned something as well that I thought was pretty interesting around oil markets being undercapitalized or underinvested just because things haven't been so attractive.
Yeah, so a point that I wanted to bring up is basically if we want to increase the output of oil, it's not something where you can just turn it on overnight. Obviously, in the past 5 years, the price of oil has been kind of stagnant. It hasn't been going that high. I mean, even during the pandemic, we had a situation where it was below zero. So capital markets haven't seen necessarily producing oil as being somewhere where they want to allocate their capital. So this is going to take some time. And the amount of time it's going to take isn't clear for anybody. And there's two camps right now looking at it saying like, yes, there is this excess capacity in either Saudi or in the Middle East. But on the other hand, they're saying how much excess capacity really is there? Now, another problem which we're facing, obviously, is the fact that at the moment, Russia could, if they wanted to, apparently, cut around 5,000 barrels a day. Is it 5,000 or 500,000? I think it's.
I'd have to look. I'd have to look for you.
I think it's one of them. They could actually cut that from their production and it wouldn't affect their economy at all. So the question is, if the situation in Ukraine and if the Biden administration are not actually capable of coming up with something where we sit at a table and we sort of negotiate the outcome of the current war, that is a card which Russia could pull. And the question is, are the other OPEC members able to kind of fill in that gap? Because if they were to pull that much off the table out of their production, we could see prices well over $200 as what some people are estimating. So that was something which I was thinking about over the week.
Cool. Good insight.
Coming over to the idea of inflation, obviously, we have some supply inflation as in terms of energy prices and also food prices, which is driving one side of the factor. Now, the Federal Reserve can only really kill demand side inflation, and they're doing that obviously by controlling the money supply and controlling interest rates. So it's going to be very interesting to see how everything plays out. I think it's going to be extremely exciting to see what happens in the markets. And obviously, the euro-dollar parity was also an extremely interesting event, which you had called. So yeah, I think it's all systems go. It's very, very exciting times. I'm personally trying to keep as much cash as possible on the side because I do think there will be amazing opportunities knocking around very soon.
And the last thing we would want to touch on in terms of like a broader macro perspective, and then we'll talk about like some interesting levels on Bitcoin and ETH, is this 20 bip spread on US 10-year and US 2-year treasuries. It's pretty freaking wide, right? And essentially, usually there's meant to be yields on US 10 years should be higher because there's more risk the longer term you're tying up your dollars for anybody who's unaware. But the fact that the US 2-year is showing it around 20 bips higher and it's a massive spread. I mean, this doesn't usually occur. If there is some sort of inversion where the 2-year is in front of the 10-year because of some concerns in the short term, usually it's not that wide. This is pretty freaking wide, right? And something that I'm going to be watching very closely. You know, if there is some sort of return to the mean and the curve kind of goes back to normal, then I wouldn't be too concerned. But if this continues to get wider, this is something we're pretty concerned about. And it's kind of also calling the Fed's bluff that, you know, the market is almost anticipating that within 2 years, whether they hit 3% and then cut, or they don't really get past 3% as an interest rate, that's kind of what it's showing there. And 3% federal funds rate is still historically quite low. And we still had a raging bull market when markets were around 3% as well. So if we normalize rates at these levels over the next 2 years, that could signal a potential bull market. I'm not saying it's going to happen now, but something to be watching right now. This is a very interesting setup. I'll be watching it super closely over the next coming week or so, especially when we go into the Fed meeting for the interest rate decision. But we'll cover that later on. I just wanted to bring up real quick BTC. Let me just get rid of this for a second. And
let's get to the interesting stuff.
Let's get to the interesting stuff. The bread and butter, what I live for, is some BTC. So let me just get rid of this from the other day. Okay, so I want to give you guys the 411 on what I'm seeing here. So if we have a look, I'm just going to get rid of some of these earlier levels that we had painted up earlier on. Okay, so what I'm seeing really clearly is on this bottom structure after the capitulation event that was, you know, around the 3AC issue and the 3AC insolvency and Celsius saga, contagion, all that good stuff that had promptly eviscerated crypto markets. Is I'm seeing here what we're witnessing is a 3 higher lows. So if we go here, bang, 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 it's all pretty clear as daylights as to what it is. And also 2 sets of higher highs already here from the low event. So from the capitulation, we got posted up around 17.6. And then we've got here, we've just got a very clear level, 2 higher highs, which is really attractive. So what I'm anticipating is a bit of a sideways move up towards that 25K pocket. So this is the kind of channel where I'm expecting things to kind of play out over the next little while. So yeah, I'm obviously I'm always bullish on BTC, so I have to kind of temper my perspective at times. But you know, this is a really nice bottom structure on the market, you know, and sentiment isn't all that bad. It feels like a lot of the bad news has been priced in. I think you know, crypto kingpin Sam Bankman-Fried said something similar along those lines. When he was on a podcast with Real Vision, he was saying, look, unless something comes out that is negative, of course we can head lower. But for the time being, of the known events and of the known situation, most of the downside has been priced in, and a lot of the forced liquidations have probably already occurred. So the worst of it is probably behind us. So I'd be looking at this, and if we do get a retest of this upper level and get a pullback, and continue to rally, I would say that kind of validates this channel. And this is going to be a trader's dream to kind of trade it all the way to the upside. And it's a nice accumulation level where you're not having to catch a falling knife. You're not seeing like prices get smashed and you're thinking, is this the bottom at 25? Is it the bottom at 23? Is it the bottom at 20? 17? Where's the bottom? And you're not having to buy a falling knife, which can be quite daunting. You can just be accumulating in a rising channel. And then if you don't want to take on market orders and you feel that's too risky, you can put some limit orders down below towards the bottom end of the channel. Hopefully you get filled up. And worst case scenario, you can put some buy stops towards the top end of like this little reversal that we're having. So that way, you know, you can be buying on confirmation or you can be buying on pullbacks depending on your strategy. So that's one thing I'd be watching there. ETH has had actually.
I just wanted to touch on that point that you came up with, where you feel that there's a lot of the downside or a lot of the news has been priced in. That there's really this feeling last week, kind of, that everything was business as usual in a way. I feel we saw that in the equities markets. We also kind of saw that in crypto as well. And as you were going to say, please pull up the ETH chart, because I've been trading ETH and getting screwed on my shorts for the past 3 days. It's really moving sideways, but as you said, it's moving up. Tendency is going up. So it's very good news as far as the sentiment towards crypto is concerned. And as you said, great opportunities to trade in this kind of channel that you've pointed out here.
Yeah, and if speaking of ETH, it's actually a little bit more clearer what that looks like, because it's actually a lot stronger. So we've got a huge level of resistance that's ongoing here at the moment. No close above this level, right? Nothing, no close. We've had some wicks above it, right? But that is a pretty clear line in the sand there.
And that is how much? 1,200 and what?
41.
41.
So 1241 roughly. Like, I mean, you look here, this high here, 1247. This one 1257 is pretty much bang on that area. 1255. This one here 1280. So like anywhere above like that 1270 pocket, and this most recent one was 1288. So I'd be watching like, yeah, just around that 1250 area. Exactly.
And if we get a break upwards out of that, you see it going up to the yellow line?
Yeah, I'm expecting 1400, which is the previous all-time high. It's a bit of a psychological level from the 2017, 2018 bull run. But also I like the bottom structure that has been put in here on ETH as well. Obviously, guys, please bear in mind, I am a permanent crypto bull. So doesn't take much for me to paint funny lines on a chart to look for a reason why it would be heading higher. But the thing that I want to kind of highlight are these 3 sets of higher lows that has occurred, and this nice little double bottom that's occurred here as well. So I'll just show you that nice picturesque double bottom, and let me just fix that up just so it's nice and clear where the fills are. So we had that here. The low came in at 1,005, and then this one here was 9,997. So in less than $10 difference for this picturesque double bottom. And yeah, we've had a nice capitulation. Again, you're not buying into a falling knife, which we had seen it occur from 1,700 as it proceeded to teleport to sub 1K. That was pretty concerning for ETH bulls. But we've also got bullish catalyst with the ETH merge potentially going ahead, on track around September, October. That doesn't mean that there's it needs to go up in price, but you got to look for the green shoots of positive narratives in these current markets. So yeah, if we clear that 1,240 pocket, and which we haven't had a close, you got to look for a close, because we can get a spike above this 1,240, sucker in some bulls, classic bull trap, breakout bull trap, and then close below on the daily, and we're still back in the channel. And then we would most likely actually end up, doing something like this where, we spike higher, but then we end up like doing a little close below that level, and we just go for like a little pullback before we get the actual genuine run and break above, before we go to that 1,400 zone. So that's something to be mindful of as well. So we might actually end up back at like 1,080 after suckering in some people and liquidating some late longs. This is what you'd be looking for. But it's a really attractive market structure. Bit concerning resistance level. The macro picture still hasn't improved. So I'm not saying that this is calling for all-time highs, but from a local perspective, really nice accumulation level for the spot buyers. And maybe having, if you are a derivatives trader or a perps trader, look for a pullback, set some limit orders, because yeah, like right now, this is a pretty strong level of support, but a really attractive market structure at the moment to be watching for, especially on a breakout or a pullback and then following a breakout. So that's my charts. That's my kind of short-term thesis. What are you seeing, Alex? What are you bullish on? What are you bearish on? What are you looking at? What do you feel?
I'm pretty much sitting on the sidelines, to be honest. I'm daily trading ETH. As I told you, I got screwed a couple times shorting it as it's been going up. So I'm sitting on the sidelines for the time being, trying to accumulate some cash reserves to see what's gonna pan out Q3, Q4 this year. To be honest with you, I think there's such a fine line between sitting on the sidelines and actually getting involved and putting your capital to work. That being said, as far as ETH and Bitcoin is concerned, I'm dollar cost averaging into that. I really do believe that the opportunity cost of not purchasing some of that at the moment, at least systematically, is something that if it does go back to its all-time highs, which we all do hope it will, I'm not going to be the one to say I fucking missed it again. Sorry for my language.
No.
So yeah, that's very much how I'm feeling, how I'm looking at it. I'm also looking at Warren Buffett, Berkshire Hathaway holdings as well, trying to keep an eye on that, looking at what he's purchasing, what he's buying, and trying to get into some options from an Instagram account called Only Options Trading. So they give some advice on a Discord channel. You pay a monthly fee. So trying to get in on that. No, but enjoying the journey, definitely. Trying to learn more how to read the charts, obviously from you, and also doing my own research. And yeah, so far so good. Gotta love it.
Love your thesis, man. That's it. Keep crushing it. And look, the more you learn, the more you earn. And at the end of the day, we're testing our thesis in the market and putting real dollars up, and not just trying to speculate on a demo account. We're actually trying to make this thing work. So, which is great.
100%.
This is how it works.
For sure, man. Well, thank you very much for taking the time today. Thank you guys for staying till the end. See you next week. Keep it real. Take it easy. From both of us at the Crypt, see you later.